Street in Forest City. I also have an office in Tryon, 226 South Trade Street, the beautiful Art Deco building right off the historic downtown Tryon. And it's an old building. It's a beautiful building. It was a gas station in the 50s. You got to come in and see. I've got some pictures of it. It's wonderful. So we are very, very busy already, if you can believe that. Monday marks the kickoff of tax season. Well, what we call the kickoff of tax season. Monday, January 23rd, is the first day that you can file individual tax returns. And we are really excited about that. Typically, that's the day that gets it going. The IRS will start accepting e-filed, electronically filed returns on Monday. Now, even though they say that, we have actually been doing tax returns now for about 2 weeks, and we have been, sending them up to the server where they just sit at our software providers' servers, and then our software provider sends them off to the IRS. So they're like the go-between. I'm an ERO, I'm an electronic return originator. So when you come to me and I prepare your tax return, I don't send it to a third party or a fourth party or a fifth party. There's no chain of command. It goes from me to our vendor, and it goes right to the IRS, to the modern e-file platform that the IRS uses. I actually had 5 of them come back yesterday as accepted. So and I knew it when I got those back, because I get it posts on there that they've been accepted. When I got those back, I said they're already testing the system. That means they're ready to go hot, and I really feel like they are. So I'm going to talk a little bit about what's going on there, what to expect this year, our tax filing season. I'm going to talk about amending prior year returns, what to do to amend, and some of the things, there's some misconceptions out there about amending. I'm going to talk about something. I usually don't take a deep dive into some of this stuff because it can get over people's heads really fast. And I try to keep the program current, but I try to keep it where people can understand. But I'm going to talk about an abusive tax shelters. There's been a lot of talk about this stuff, abusive tax shelters and versus legitimate expenses. Okay? And then I'm going to talk about the taxpayer advocate. Tom, do you remember Erin Collins? I've talked about her before. You may not remember me talking about her. Erin Collins, our girl. She's our kind of girl, let me tell you. Taxpayer advocate. She's been the taxpayer advocate since 2020. She issued her report, and ouch, it was a stinger. It really was. I'm going to get into that a little bit, take a deep dive there. And I'm going to wrap up. I'm going to talk about RMDs. I want to talk about that a little bit. There's some confusion about what an RMD is. It's required minimum distribution for you folks that are 72 and above, and you have a pension, an IRA, a retirement plan. And it's basically if you put money away tax-free or tax-deferred, there is a difference. I'm going to talk about that. You are at some point required to take that money back and pay taxes on it. If it was tax-deferred or tax-free, there's some things there you need to do. Because people are confused. They say, well, I put this money away tax-free. Well, was it tax-deferred? It might have been tax-free at the time, but you might owe some taxes now. RMDs is how the government gets their money. Back on that. So. Here we are, the 21st of January. And, Tom, it has gone by fast. Tom, my engineer this morning. Good morning, Tom. It has gone by fast. Really fast. It's hard to believe. We were just talking about tax season beginning, and here we are already in it. But I want to welcome everybody, those of you live streaming me at www.wcab59.com. Thank you. Good morning. Those of you that pick me up on the podcast later at gilberttalkstaxes.com. We will post the audio. Emily's been doing a fine job of keeping up with those. I think we just have the last couple of programs to get up and we'll be done. There is some work that goes into doing that. We edit it and clean up all the loose ends on there, because I record straight through and then we edit it and put it on there. And those of you that listen and reach out to us afterwards, thank you so much. I really do appreciate it. Now, let me get into it. So we are preparing tax returns. I am an enrolled agent. I am authorized by the enrolled with the IRS. They give me my authority. I represent taxpayers in IRS audits and any legal matter with the IRS. I represent them, can represent taxpayers, legal matters with states too. All states accept our authority as an enrolled agent. So if you need to reach me to do your tax return, or you want to talk about your investments, you want to talk about a tax issue you're having, my telephone number is 828-289-9300. So I can meet with you either at our Tryon office or at the Forest City office. We are pretty much permanently closing the Rutherfordton office at this time. We still have Ann there, so she can point people over to Forest City, but we're pretty much going to close that office. I don't know, Tom, I told you this earlier, and you were a little surprised, although not too surprised. There is actually a national accountant shortage. I became aware of this. I was suspicious of this for a couple of reasons. Number one, you can't find one to hire one. You just can't. They're just not out there. I used to have people email me resumes, mail me resumes, drive by the office and drop off a resume, or just come in and ask me if I'm hiring bookkeepers and people that did tax work that didn't want to be in solo practice, and they were going to get out of it. They're going to, close their business and go work for somebody because it's just too hard to run a business. Things were just getting very expensive, but that has all dried up. No, I have not had anybody, and the number of emails that I'm getting from people that want to see if I'm looking for a job or I want to go work for a corporation has really gone up. So that tells me that something's going on, but I've been researching it and talking to some other people, and they're saying no. The schools, they said, no, you're right, Gilbert. They're just not graduating them. And really, this generation that's coming up does not want to be, well, they don't want to be much of anything. They want to sit at home on their computer and trade Bitcoin, or play video games. Seems to be the career choice for this next generation, for most of them. But I rarely hear young people that say, I'm working on my bachelor's and I think I'm going to major in accounting. It's like you just don't hear that anymore. So there is an accountant shortage, and I've been absolutely shocked by it. So we're gonna close rank, old military term there, Tom. We're gonna fall back and close rank. I'm just gonna focus on the Forest City location, which is 704 Oak Street. So we're gonna be seeing all appointments there. We're not gonna be seeing people at 113 Whiteside Road anymore. I'm gonna keep the office open a little bit longer, just so people know where to go. But pretty much all appointments are going to be in Forest City or Tryon. And I think it's just the best way to handle this. I was hoping to keep it open during this tax season, but it's just not going to happen. But we are still doing what we do best, and that is file tax returns and deal with IRS issues. Now, I said Monday is the first day to e-file. The deadlines this year are the same as always. We had the deadlines change the last couple of years because of COVID, but we are back to the normal schedule. Business returns, all business returns, that's 1065 partnerships, you know who you are, and 1120S, S as in Sam, S Corporation election tax returns. Those are your LLCs that are taxed as an S Corp. You guys, your tax return is due March 15th this year without fail. March 15th. The IRS will not be extending. I've already had some people call. Do you think they're going to have extensions this year? The answer is no. They've already said no. It caused just too many headaches. And I'm going to get into that when I talk about the taxpayer advocate. She addresses some of that. It's some of the problems they're having now is because of all those extensions. Looking back, they regret they did it. Then you normal people, you individual 1040 filers, your deadline is April 15th. Now this year, you get kind of a bonus couple of days because the 15th falls on a Saturday, so it's going to be due the following Monday, but that's a holiday. That is Emancipation Day in Washington, D.C. It's a federal holiday, so it's going to be April 18th. Those are due, so those are the people that wait till the last minute. They get to procrastinate another 3 days, but that is due April 18th at midnight. Those are due. Now, what if you can't get your tax returns pulled together by March 15th and April 18th? You can file for an automatic 6-month extension, which kicks it up to September and October, respectfully. Oh, and also C Corp, Incs and corporations or LLCs that are taxed as a C Corp. C as in Charlie. Your deadline's also going to be April 18th this year. And then 990s, your not-for-profits, are in May. And if you file an extension, you'll go through November. So none of that has changed this year. So we are good to go on that. Now, this is the time of the year where I always talk about when should you be getting your W-2. Okay, by law, your employer is supposed to issue your W-2 by January 31st. Okay, now that doesn't mean that if you don't get it by, midnight of January 31st, you can sue your employer and call the IRS, and because what they'll tell you is, give it a little bit of time. It could be in the mail. Just wait. Now, if you know your employer is out of business, which we've had a lot of that happen because of COVID, businesses closed. Now, not so much in 2022. We had more of it in 2021. They closed their doors and just didn't reopen. And people did have to chase down their W-2s. Okay, if you think that's going to be the case, or that's going to be the case, and you're not going to get your W-2, there are some things we can do. There are some forms you can fill out. You can do a paper file, and there's some steps you can take. I'll probably get more into that in the next couple of weeks. But January 31st is when you're supposed to get those W-2s and those 1099s. And that includes the 1099s for interest, 1099s for dividend, 1099s for brokerage accounts. And don't forget, those of you that have marketplace insurance, ACA, Obamacare, whatever you want to call it, those 1095As, you're supposed to be getting those. Also, you people that are self-employed, or you have a business, and you do credit card processing, you're going to get that 1099K. All those 1099s, 1098s, 1095s, all of those are supposed to be in your hands, ready to file your tax return by January 31st. Again, if they're not, there's some steps we can take, but just be aware. I'm leery when people want to start filing their tax returns early, meaning before January 31st, because how do you know you got all your forms? Now, the ones we've done are people that have one job, a W-2. They already got that W-2 and not much else, so they know this is it. We go ahead and file those. Or a lot of businesses that pretty much there's no forms coming to them. They're a straight up business. They've got their bookkeeping, and so we've already filed quite a few of those. But for the rest of you, it's really going to begin February 1st. Okay, now, estimated tax payments, the last day you had to make your estimated tax payment was January 15th. That was for last year, for it to count for last year. Okay, now there's a little used rule, and it really doesn't affect that many people, but it does affect some. There's a rule that if you don't make your estimated tax payment by January 15th, but you file your tax return by the end of January, there will be no penalty for not sending them that last payment. And the penalties are very small. That's why most people don't. When I tell them the penalty's literally double digits, they just say, oh, don't worry about it. But there are some people that make some rather large payments, and this might be a factor for you. If you didn't make that payment, but you can pull that tax return together, try to go ahead and do that. It'll save you some money. Okay, Tom, quarter after. Let's take that first break. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. I want to tell you about another great local business, Forest City Concrete and Grading. Call Sean at 828-447-5949. Sean is a licensed general contractor. He can do your job from site development to completion. That's Forest City Concrete and Grading. Call Sean at 828-447-5949 and tell him Gilbert Talks Taxes sent you.
This is Kimberly. If you owe the IRS for prior years or you have unfiled tax returns, don't call those national toll-free numbers. Affordable, secure, and local help is available for you. Call Gilbert at 828-289-9300. Gilbert is an enrolled agent permitted to practice before the IRS. Taxation is his specialty. He knows the latest laws to help you with your problem. Avoid garnishments, levies, and liens. All initial consultations are free. Call Gilbert at 828-289-9300.
We are back. This is Gilbert Talks Taxes, WCAB AM 590, FM 100.9. Those of you live streaming at www.wcab59.com, good morning. Thank you. I am here in the Kind of Blue room wearing my fallish clothes, and my hair does kind of look fabulous. Got an appointment with Robin on Monday, and I told her it is urgent. It is a critical hair day for me, Monday. But those of you live streaming, thank you so much for taking time to watch the program. And those of you that pick me up later on the podcast, thank you. And thank you for the feedback, and it's really been wonderful. And all of you that I've met doing this radio program, that stopped by the office, thank you so much. I know there's a lot of things you could be doing for this hour, and thank you that you choose to spend it with me. And that was Kimberly. Thank you for that. I told Tom, I need to get Kimberly in here to do a program of Gilbert Talks Taxes. She is perpetually cheerful. I know. It's how do you do that? I mean, perpetually. I have never met a person perpetually. Well, Christy, my wife, Christy, who just brought me my phone. I'm so grateful for her. She wakes up happy. I mean, that's a genuinely cheerful person. Yeah, I need to get Kimberly in here. I think that would be a good program. Actually, Kimberly's husband's a very interesting person. He's self-employed, and I just really respect self-employed people. You know, being one myself, but I've done the corporate work. I've done the corporate world, and I really think people that are self-employed, they're very unique. They have a unique mindset, and it's very. I have a lot of respect for people that do that. Not just because I'm one, but because of it. Okay, let me talk about amending prior years. So this time of the year, when I get new clients, and we've gotten quite a few new clients, a lot of people have moved into the area. As those of you know, because you've met them, they're your neighbors, a lot of people have moved into the area. We have a lot of people from out of state. And interesting, people from California, and we've had quite a few move here into the county. People from California will actually seek out an EA because in California, they actually have, and I'm going to talk about this in the next section, because that is what the taxpayer advocate wants to do. She wants to similarly follow what they're doing there, and that is there's competency standards to prepare tax returns. In California, you have to be an EA, a tax attorney, or a CPA to sign off on a California tax return. It's so people come and they look for an EA. They're used to working with EAs, and they know what an EA is. A lot of people in other parts of the country don't know what that is. Don't even know, that there's a difference between a person that studies to do a tax return and a person who just goes and buys some software and has a laptop. There's a big difference. So, but a lot of people have moved here. So I'm getting a lot of new clients, people coming out from up north, and just we've had a lot of accountants retire. And I've just said in the last segment, there is a shortage of accountants. So a lot of people will come to me and they'll bring me the last couple of years tax returns. And they always say, or not always, but a lot of times they'll say, there was something about that tax return that didn't seem right to me, and they'll show me something, and they'll go, and I said it to the person, and we never did anything about it. Can you take a look at that? So I'll look at it, and I may or may not find an error. Sometimes it's a serious error. Sometimes it's a minor point. But sometimes it's a serious error. Something got omitted. Something got missed. A lot of times it's an expense that got missed, or an expense was categorized wrong, depreciation that was calculated wrong, assets that were sold and weren't the appreciation wasn't recalculated and added back correctly. It's things like this that we'll catch. And so the question is to amend or not to amend. That is the question. But people will say, well, I don't want to amend because I don't want a red flag. Well, that's not necessarily true. Okay? that it's going to create a red flag. If you legitimately have an amendment that's going to get you a refund, we need to do it. There is no red flag in that sense. Will it increase your odds of being audited? Well, it gets your tax return into a whole other group at the IRS. It goes somewhere else when it's an amended return. Some amended returns can be electronically filed, so it never actually leaves the system. It still goes through the e-file process. And if it's a simple enough return, it's not going to, nobody's actually going to touch it. Like human hands are not going to open it up and look at it. It's just going to stay within the system. Other returns, amended returns, have to be paper filed. And if you paper file it, of course somebody's going to get it. Now, will somebody scrutinize it and say, oh, this looks suspicious? It doesn't work that way. They don't. It'll go in there, and then it may get looked at as part of well, we're looking at people that depreciated assets. We're looking at people that did certain things, and they look at them as a group, and then they may pick some randomly for audit. That's how the system works. Like, nobody's going to open your envelope and go, oh, Tom, look at this. This smells fishy. Here, call this guy. Find out what this is all about. It doesn't work like that, okay? These IRS campuses are huge, and I'm going to talk about the one in Kansas here in a second. But they're huge, and there's, 50 at the one in Kansas specifically. There are right now today there are 4,600 people there working on campus, not off site, and that campus was built to hold 8,000 people. So they're only at like half capacity, and that's 4,600 people there that work there. So that's not how that works. So it's not going to create a red flag, and they'll say, well, I don't want to do it because I don't want a red flag. I mean, I understand if you don't want to do it. Some people say, well, I don't want to go through the trouble, especially I'll find something and I go, well, if we do this, it's going to get you back, $100 more or $200 more. People are like, let's not bother. Now that I understand, but I've actually found some errors that have netted people thousands of dollars. I mean, I've taken positions that have netted people $86,000 refunds because of a prior position that was incorrect. So again, to amend or not to amend, I mean, I can't tell you what to do. I can just suggest. But a lot of people think that it's somehow going to put you on their radar. It's not. It's really, really not. And there are many reasons to legitimately amend. There are actually, I have seen returns that have been amended 2 and 3 times for different reasons. They've amended for, complicated, very complicated returns that have many moving parts. Sometimes the amendment is done through no fault of your own. We'll go ahead, and I've had this happen, we go ahead and file the tax return. It actually happened a lot. It happened a lot in 2014-15. There was a lot of tax law change with how cost basis was calculated by brokerage houses. We're talking about Wall Street. Let's just say it at Wall Street. So a lot of the big brokerage houses, like Wells Fargo was a big one, and BlackRock, some of the big brokerage houses, they were there was another one, Franklin Templeton was another one. They issued amended 1099s like in July and August. So we had filed tax returns, and all of a sudden we started getting phone calls from people saying they got a package in the mail saying that, important tax document, consult your tax advisor or tax professional about this information. So when they start the paragraph that way, you got a problem. Okay, this is important. And then they had to amend, and some of these amendments some were insignificant. They were just cost basis was adjusted. Others was pretty substantial. Pretty substantial because it affected the cost basis. Cost basis is when you buy a stock for $1 and you sell it for $3, you don't pay tax on the $3. You pay tax on the difference. So you bought it for $1, sold it for $3, you're going to pay tax on the $2. That's your capital gain. Or you can have a capital loss. Well, that year, because of the tax law changes, cost basis was calculated differently. There was a lot of moving parts to it. And what happened is the tax law change happened kind of late in the year. Like it was one of those December 31st at midnight things Congress is voting. So by the time the law trickled down and got to the people, in fairness to them, to these banks, here they were, end of January, still trying to figure out what to do. I'll never forget that year. It was really years. It actually happened a couple of years in a row. Years. It was very, 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 very confusing. So we ended up having to amend a lot of returns. We never had any IRS letters or anything on any of them. All of them went through. They were simple amendments, and we did them. And you had to do those because those affected cost basis. It affects what's going to happen in the future. That's the other reason you want to amend. You want to get something right in the past because you have things called carry forwards. Carry forwards, usually they're net operating losses or they're capital losses that you carry forward. Well, if your carry forward isn't correct from 3 or 4 years ago, it's not going to be correct in the future. And some of these carry forwards can go forward 5 years, some can go forward 20 years. So like NOLs, net operating losses, we carry those forward for 20 years. And there's a whole strategy with those where you can actually carry them back. So we find a mistake in your 2021 tax return. We see we have an NOL, and I'm just using this as an example. This isn't what's going to happen to everybody, because I'll get a phone call, Tom. I want that carry forward thing. I want where you're going to lose the money and give me a refund. No, that's not for everybody, okay? That may be on your refund. So we find a net operating loss. We can actually go back 5 years and amend to claim that loss in prior years. And there's a lot of reasons why we do that, and there's a lot of reasons why the IRS allows that. So I wanted to just talk about that because we talk about that, and is it an audit alert? No, not really. Now, 1040Xs. Let me go ahead and get into that here before we take our break, which means, Tom, I'll talk about it for 5 minutes before we take our break. 1040Xs. 1040Xs, it is a tax return. So there's a little confusion about that because the mail you'll get from the IRS about your tax return. So it is a tax return you're filing. It's a separate standalone tax return in its own right. So you just need to know that as you're filing it. You're not just whiting out things on which I've seen this. Okay? You're not just whiting out things on your tax return and putting the correct number in there. You actually have to create this new tax return, and the numbers that you plug in are the old numbers from your tax return and then the corrected numbers. And you do the adjustment, and not all amendments are to get refunds. We've actually had to amend to pay more money. Why? Because it's the right thing to do, and better you catch it than the IRS catch it 2 years from now, and you get penalty and interest for 2 years. I've seen failure to file and accuracy penalties that have increased an amount due by 25%. Actually 50% if it's an error. There's willful omission errors and things like that. But typically you just have your regular penalty, your regular interest. So you want to do it to avoid that. If you're proactive and you're ahead of the curve on something, if you know something's wrong, deal with it. So we run into a lot of that now. Now some of these we may kick the can up the road and do those after tax season. Some of them can wait. It just depends. But just know, when you bring me a tax return, I am looking for errors. I'm looking for things. I'm looking to make sure that things were done right, or at least that things make sense. We've been doing this long enough now that we can look at numbers and say, it just doesn't look right. And sure enough, if it doesn't look right, it usually isn't right. Okay, our second break, Tom. Let's go ahead and take that break. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
A good sign is good business. Make your business stand out with a professional sign from Diaz Signs and Graphics. Successful companies all over the United States trust the team at Diaz Signs and Graphics. With 25 years of professional experience, we have the ability to present your company's image in the best light. Not only display signs, but Diaz Signs and Graphics can print banners of all sizes. If you need magnetic signs or window and vehicle graphics, call on Diaz Signs and Graphics today. We offer a full line of sign products for any event. 3D, sandblasted, storefront, and monument signs are just a part of a complete selection of quality signage. Professional signs and banners to fit any budget. Let your business stand out. Call Diaz Signs and Graphics today at 286-4900 or stop by the sign shop located on Main Street in downtown Spindale. And check our website for more suggestions at diazsignsandgraphics.com.
Hi, I'm Sandra. My husband Peterson and I own Precision Detail and Tint. We invite you to come to our new location at 620 U.S. Highway 64, Rutherfordton, on the corner of Silvers Lake Road and Highway 64. Whether you need specialty detailing for your car, RV, or boat, or window tinting for your automobile, or home or business, we can help you. Voted Best of Rutherford County for 11 straight years, you will know you will get quality work at a good price. Stop by for an appointment or call 828-245-8889. We're open Monday through Friday 9 to 5 and Saturday 9 to 1.
We are back. WCAB AM 590 FM 100.9. Gilbert Talks Taxes is the program. I am Gilbert Carmona. My telephone number, which did I give it out yet, Tom? I just get right into taxes. I just love them so much. I get right into it. My telephone number 828-289-9300. So if you need your tax return done, I'm the guy to do it for you. Okay, just don't even go further than that. It's me. Call me, 828-289-9300. Maybe that should be my position, Tom. Just don't even give them a choice. Just pick up the phone and call me. 828-289-9300. Don't bother emailing. Don't bother texting. Just let's just do that. Okay. I want to say one word about abusive tax shelters versus legitimate expenses. We're talking about amending returns. Let me get into that real quick. Abusive tax shelters. So I've said it before. In tax code, there is tax avoidance. Okay? Tax avoidance is not tax evasion. Okay? And it is actually in the tax code that tax avoidance is allowed. That is why Congress gives you all these tax credits. And you using those tax credits is actually tax avoidance. Okay? And it's codified in the law. It's in the law. You can do it. It's not like, people in an audit. And I tell people, don't say that. Auditors hate this. They go, I just want to pay my fair share. No, you don't. You don't want to pay any taxes. Be honest. Okay? Nobody wants to pay taxes. So don't sit there and try to convince the auditor that you do. Okay? You don't. Okay? Every position we take, but what we want to do is we want to take legitimate, legal positions. Okay? To reduce your tax bill. They know you're doing that. You know you're doing that. They do that. Okay? So where does it cross over into what we call an abusive tax shelter? A couple of weeks ago, that judge ruled that Donald Trump or the President of the United States, it was about Trump, has to present all his tax returns. And everybody was like, one person said Trump was really humiliated. And I'm like, I don't think you realize what just happened. Now every politician is going to have to show their tax return. Every president is going to have to show their tax return. I'm actually kind of looking forward to this because they say they show you their tax returns, but they really don't. They show you bits and pieces. They all do it. They all take advantage of these tax shelters. Of course they do. They're the ones that write the laws. Okay? And these laws are there. So at what point does it become abusive? And that's always the question. That's always the line that people want to know. Where it becomes abusive, or another word is risky. And one of the things that the IRS hates is when you create a tax shelter or take a position for the sole purpose of avoiding taxes. In other words, you would not have done this if it was not going to reduce your taxes. That's the line. That's where it becomes abusive. When you create, you've heard of people creating these tax shelters down in the Bahamas. The FTX kid, why was he in the Bahamas? Did anybody stop to ask that question? Why was he in the Bahamas? Not besides that it's a beautiful paradise island, okay, with an average temperature of 75 degrees. Why was he in the Bahamas? He was in the Bahamas because it was a tax shelter. Okay, and he could do things there that he couldn't do anywhere else. And that's all going to come out in court, as it is already coming out. That was the sole reason he was there. That's an abusive tax shelter right there. Now, if we do something because it's got a legitimate business purpose and it's got a great tax benefit, that's totally acceptable. As a matter of fact, that's admirable. Okay, and that is the position you try to take. That's the position we try to take. Rental property, as an example. Rental property is notorious for creating losses. Why? Because you've got depreciation, you've got expenses, you've got a lot of things that happen with rental property. And most people that own rental property, their payoff is the long term when they sell the property. That's usually where they really make their money. And when you sell it, you're taxed capital gains, which is, long-term capital gains if you've held it for long enough, which is, one of the lowest tax brackets there are. So that's a great tax shelter. And it is a tax shelter, and there's nothing wrong with that. So there is an abusive a point where it becomes abusive. One example that I use, and actually one of these was in the news not too long ago. An example of it is like this. You're a professional, or somebody's a professional, and they have an office where clients come. It could be an office at home. It could be an office, in an office building, location, retail location, but clients come to you. So you need a desk, right? Do you buy a $300 desk at Staples, or do you buy a $30,000 desk? A custom desk. So there was actually a story where the man bought an antique desk that was very expensive. I think the desk was $10,000 or $15,000, something like that. He bought this desk, and he got audited, and the position was, I have to have a nice desk because I deal with high net worth people, and I have to look the part. So I have to have nice furniture. The example that was in the news, the man bought a $100,000 antique grandfather clock. Legitimately, it was an antique. It was worth that much money, no problem there. And that wasn't even the argument. Well, you could say, that he shouldn't be allowed to write that off. I mean, a $25 quartz clock hanging on his wall would have told him the time. But you get beyond the function of it. He needs to look successful. He needs an office environment for his clients, and the IRS actually let him have that write-off. They had no problem with it. It was legitimate. It was an office. It was in his office. It was office decor. He depreciated it. He paid for it. He did all those things. So there's a lot of areas there where you look at it and people say, well, I don't want to buy this, or I don't want to buy this piece of equipment because it's more than what I need, but I may need it in the future. So we have those conversations about taxes, and my answer to you is get what you need, do what you think you need. If it's legitimate and it's for a business purpose, don't worry about it. It'll stand up to the audit. Okay, so I just wanted to talk about that because I get questions about that quite a bit. Now, I'm probably not going to get this done before the break, Tom, so we may take that break maybe a little late. Our girl, Erin Collins, I've talked about her before. She is the national taxpayer advocate, and she's just a fireball. I like her. She tells it like it is, and if there is ever a department in the government that could restore your faith in government, if such a thing were possible, it's the taxpayer. Well, I'm sorry, I always call it the taxpayer advocate. We call it the TA, but it's the NTA, the National Taxpayer Advocate. Now, so let me give you a little background on what that is. Congress created this. They're actually part of the IRS, but they're not. They're not within the IRS. They're outside of the IRS. They are the National Taxpayer Advocate. They actually advocate for us, the taxpayers. Okay? And you can actually go to them for help when you can't get resolution on anything else. With anybody within the IRS, your appeals haven't gone through, your paperwork is just stuck, it's not moving, you can't get it moved, they're there for you. I've actually had 5 cases with them, because they don't accept every case. They have to review it and accept it. They're limited by staff as to how many staff and budget, how many cases they can take. I've had 5 over my 20 years of doing this, 20 plus years of doing this. I've had 5, and the results have been fantastic. You know, with them, they get it done. They just get it done. And I had several were very complicated. I had one that was just a simple thing. I could not get the paperwork to move off this auditor's desk. Literally, that was the scenario. And there was always something with this auditor. The paperwork just, it was like it's still there. They weren't they weren't returning letters. It was just very, anyway, one phone call from them got that letter moved. So National Taxpayer Advocate, they're outside of the IRS. They advocate for us. They're actually like an ombudsman position. So there's a director of that, and since March of 2020, it's a lady named Erin Collins. She is, and her title is the National Taxpayer Advocate, even though it's an office with many, many people. That is her title. So she is the voice. Their tagline is "Your voice at the IRS before Congress." So she's the leader of the Taxpayer Advocate Service, TAS, which is, again, like I said, an independent organization outside the IRS. Now, a little bit of history about her, why I'm such a big fan of hers, is she actually comes out of private sector. She worked for 20 years for a top 4 accounting firm called KPMG, which is one of these, alphabet accounting firms that through merger and acquisition, I think it was like Pete Moring and just a bunch of these companies. It's a multinational conglomerate, huge, well, top 4 accounting firm with offices all over the world. She worked there for 20 years, and her job was to handle controversies and controversial issues that her clients were having with the IRS. So a lot of it was technical, procedural issues, fine. What I say, you're straining at gnats, in the law. And that's what she did. So she knows a lot of people at the top levels of the IRS because she dealt with them. And before that, she was a trial attorney for 15 years. So this lady's been around, and she knows her stuff. Now, the Taxpayer Advocate, by law, and I'm going to explain to you why this report is so important. The Taxpayer Advocate, by law, must prepare 2 reports a year, one in June and one in January. Now, she just released the report. It came out January 11th. I got a copy of it January 12th. I wanted to talk about it last Saturday, but there's no way I could. I mean, this is meaty. There's a lot here in this report, but I'm going to give you the nutshell of it. So, by law, the Taxpayer Advocate has to release this report, June and January. And in that report, they have to, and it's nonpartisan and non-controversial, meaning this is apolitical. This has nothing to do with politics. And really, when you read the report, you can feel it. This is the difference between a political hack job and somebody actually in government doing their job. And it's really an example of what can be done in government. That's why I'm such a big fan of Taxpayer Advocate Service and the National Taxpayer Advocate, Erin. Before her, it was a lady named Nina Olson. She was also very, very on her game. She was very good. So they file this report, and in the report, they have to identify 10 problem areas, and they have to offer solutions for these problem areas and what they see as problems. And this lady doesn't sugarcoat it, okay? Nina Olson, by the way, is the one that started calling the January report the Purple Book. She called it the Purple Book because it wasn't blue and it wasn't red. It was purple. And they call it the Purple Book because it was apolitical, no political sides were taken. She does it. So what was important about the one that came out, or the most important, I'll probably be talking about this more as I read more into it, but pretty much she started by congratulating the IRS on really stepping up to the plate, dealing with the backlog of mail, doing everything they could, but she really nailed it. She said, generally, for the taxpayer, the misery has continued during 2022. I thought, oh, that's the best way to say what we've been going through. The misery continued during 2022. And she was right. It was a miserable tax filing year. There are people still waiting for their refunds from 2022. They have not gotten the refunds. There are still paper backlogs. And she hit it hard. She really, really hit it hard. Let's go ahead and take that break, and I'm going to come back and tell you what her number 2 suggestion was to solve the problem, which is something I've been saying for 8 years. This is Gilbert Talks Taxes, WCAB, AM 590, FM 100.9.
As we get ready for this year's tax season, there's one thought on everyone's mind. Will Gilbert's hair look fabulous this year? Oh, yes, it will. How can I say that? Because I go to Robin Saunders at RSL Salon. Whether it's a good haircut, a pedicure, or a manicure, you can count on RSL Salon. Call Robin at 828-289-9110 because everyone deserves to look fabulous.
Jesse James Railroad Express has moved to a new location, 126 Park Lane Plaza in Rutherfordton, and they've changed their name, Jesse James Chowhound Canteen. A new name, a new place, and a limited menu. Currently, you can get smoked sausages, kielbasa's, and of course those delicious hot dogs. And you can get coleslaw, macaroni and cheese, and potato salad. Stay tuned for their new menu at their new place. Hours are Tuesday through Saturdays from 11 until 2, closed Sundays and Mondays. Jesse James Chowhound Canteen, 126 Park Lane Plaza in Rutherfordton. Call 286-9368 and get a 99-cent hot dog with mustard, chili, and onions, Tuesdays only.
Hi, this is Christy. Gilbert and I are excited to announce our new name and location. Carmona Financial Consultants at 704 Oak Street in Forest City. Let us help you with your taxes. Let us help you with your investments. Carmona Financial Consultants at 704 Oak Street in Forest City. Stop by or give us a call at 828-289-9300.
We are back. Gilbert Talks Taxes, WCAB, AM 590, FM 100.9. Wow, we don't take a break. We just keep talking about taxes. Just the mics weren't hot. Tom and I getting into a conversation here, which is actually somebody talked to him about something I'm going to talk about to end the program with today. What a coinkydink. Okay, so let's get back to our girl, Erin Collins. Pretty much she said things were a red-hot mess last year for taxpayers. It was misery. She called it misery last year. Now, interesting thing I want to say about her, and I'm watching the time because I do want to get into that conversation about the elderly and RMD. So keep an eye on that time, Tom. One thing I want to say about Erin actually spent a week in November at the Kansas City campus, which is it's like a 2 million square foot building. They have their own post office there. It's a historic post office in Kansas City. They built a complex around it. It's a beautiful building that the IRS has there. The campus was built to house 8,000 employees. Right now, it's at they have 4,600 employees, and the IRS has a lot of challenges. One of them is 50% of their current workforce will be retiring in the next 10 years. And actually, I think the bulk of that 50% is going to retire in the next 5 years. They've got a serious talent problem at the IRS. Let me call it this way, a talent challenge. But Erin actually went there and worked for a week, didn't just sit in an office. She actually got out there, worked with the people. She wanted to see what their problems were, what their challenges were. Kansas City is one of the big campuses. A lot of my mail goes there. A lot of tax returns go there, paper returns go there. So, and she did a 3-part blog about it. Very interesting to listen to. So she knows her stuff, and she advocates for us, and she doesn't just, talk down to the IRS. She really tries to pick them up. She tells them, you guys have done a good job, but we could be doing this better. And she offers suggestions. Now, what's important about her suggestions is the IRS and Congress, by law, have to respond to these 2 reports that she does every year. And they have to respond within 90 days. So this isn't just something like me, talking about the IRS, and they go, yeah, whatever. When she does it, they have to listen and they have to respond. 50 of taxpayer advocate suggestions in the last few years have actually gone into law. So when she says something, her, Nina Olson before her, and all the ones before, they listen. That's what makes this report so important and worth reading, worth studying, because it's could be what's getting ready to happen. People ask me, how did you know that, Gilbert? I'm reading this kind of stuff. I'm trying to stay ahead of it. Her number 2 suggestion of the 10 things she's put up, her number 2 suggestion was something I've been saying for 8 years. The IRS needs to establish minimum competency standards for federal tax return preparers. Period. The IRS needs to do this. It's the only way they're going to get their hands on all this other stuff. I'm an enrolled agent, so I can say that. I'm already, the IRS gives you my authority. CPAs, tax attorneys. Really, we should be the only ones allowed to prepare tax returns for a fee for people. You have to have this credentialing. It's too complicated now. The days of just, now again, I also believe that taxpayers should be able to fill out their own tax return and send it in. And I am all for these charities that do it, tax clinics, especially that help senior citizens, especially that help, disadvantaged people, low-income people that can't afford to pay a professional. And those advocacy groups have always been there, and they're very well-staffed with very professional people. Usually they're on the other end. They've got, retired CPAs, retired tax auditors, retired people working there helping these people. So that's never been a problem. They say, oh, it disadvantages poor people. No, it doesn't. They get great representation at these free clinics. So she says we have to have a minimum competency. Now, you remember the IRS tried to do this 10 years ago, and 3 people sued and actually were successful. To stop the IRS from doing this, they said the IRS needs Congress to pass a law. Actually, what the judge said is the IRS doesn't have the legal standing to regulate tax preparers. Now, they regulate everything else. They regulate financial planners, actuaries, appraisers, contractors. I mean, the list goes on. Even beauticians are licensed. I mean, think about that, But anybody can buy $50 off-the-shelf software, a laptop, and prepare tax returns and do it for people. And it's the IRS says it's one of the biggest problems they have are these frivolous filings, these tax returns that should never be filed, because they can't make that determination. When it comes, they have to process it. So that was her number 2 suggestion, authorize the IRS to establish minimum competency standards. And I was just so excited because I've been saying this, I've been saying it for 8 years. They tried it in 2011, it failed, but she's recommending that Congress authorizes the IRS to reinstate minimum competency standards. They may create a 4th group of authorized people called authorized tax preparers or credentialed tax preparers. Somehow they'll get that in the name, and I would welcome that. I think that would solve so many problems, and we can get back to a standard of how it used to be many, many years ago, where there was a high standard for this. Okay, so enough of that. Now, let me talk, and I'll be talking more about this because there's some other things she proposed that were just fantastic. Again, I'm not, and one of them was the low-income taxpayer clinics, the LITC, advocating for that. But anyway, you'll be hearing more about our girl Erin. Okay, now, last thing. And Tom, somebody went up to Tom and said, do I have to file a tax return? Elderly person on Social Security. Am I going to have to pay tax? Okay, if you're just on Social Security, even at the highest payouts, if that's all the income you have, no, you're going to be well below the filing requirement. Especially if you're married filing jointly with the standard deduction, with the senior bump and everything that you get for standard deduction, you're not going to have any taxable income, okay, on Social Security, because where the scale starts. Now, if you have a pension or you have 401k, IRA, you have stocks, you have dividends, you have investments, this is where it starts getting tricky, because they say, well, I don't work. Because some people say, well, I don't work, I don't have to file a tax return. And then they get a letter from the IRS. and they come and they say, well, I don't work. Yeah, but you had this income, and it is income. Okay? If you sell a house, you've got capital gains. Now, there's an exception. Married filing jointly gets a $500,000 exception on the gain, but we're having people now selling houses north of $1 million with a cost basis of $100,000. So they're having capital gains. That's what I talked about last week with having to pay more for Part B and Part D prescription plans with Social Security because you made too much money on your capital gains. But that's a whole other issue. But let's just say you have to take an RMD, the required minimum distribution on your IRA. Okay, that could bump you up where you might have to pay some tax. Now, let's say it doesn't. Let's say your RMD is very small, a couple of $1,000s. You've got an IRA or a 401k. RMD is required minimum distribution, and it's your required minimum distribution is $3,000, and it's not enough to make you have to file a tax return. But the fiduciary that is holding the money that sent you that $3,000, they may have withheld 10 or 20% of that money for taxes in case you had to pay taxes. Now, some know if you're below a certain amount of money, they don't do it, but some do it automatically. They're all different. So in that case, look at that, because in that case, you file a tax return to get that money back. I've seen people that have taken out $10,000 from their IRA, buy a car or to do something, to pay a bill, repair on a house, and they'll withhold $2,000. And these are people that haven't filed a tax return in, 10 years because they haven't had to. Now, you need to file a tax return. You may not have any taxable income. That $10,000 might not have been enough to push you over the top, but you had that withholding, that $1,000 or $2,000 withholding. So look at that. I've seen people not file a tax return. It was a family member that caught it and said, oh, you had withholding. You need to at least talk to somebody. And sure enough, they're getting that money back. So, and then the other thing, and I've been talking about this a lot, even though it's a zero and you don't have to file a tax return, you got Social Security, that's all you had, it's a zero, you're not required by law to file a tax return. ID theft. And elderly people have